Welcome to Barry Charles Podcast, Episode 6, the Zoom Edition, number 2. This is the second Zoom Edition video. My special guest today has investing in stocks, real estate, and he has started up a few businesses. He's really clued up in his stuff, and I'd like to introduce Neil to the podcast. Welcome.
Awesome, man. Thanks for the intro.
Nice.
I don't know about super clued up into it, but definitely have a basic understanding on some of that stuff you mentioned there.
Nice. First, Neil, can you just talk a bit about your history, where you grew up, just a little, anything that happened in your early life that got you into thinking about investing?
Yeah, for sure. So I grew up in the mighty Waikato, just in Hamilton there, or just out of Hamilton, which was a good place to grow up as a kid. We sort of grew up in a lifestyle block, 10 acres out by the Hamilton Zoo, actually, which was awesome. You know, as a kid, 10-acre block is huge. But even as a kid, I had a bit of an interest in business or basic entrepreneurship. Even at primary school, I was sort of selling. I was one of those weird kids selling things to my mates and making weird things, or making things and selling them to my mates, and then went on to having stalls down at the Frankton markets, just selling bits and bobs and cactuses and things. And then later, as I got a bit older, sort of around 14, maybe 15, 16, so around that age, started buying and selling motorbikes, actually, because they had a few motorbikes on a little farm there. Buying them quite cheap, riding the guts out of them, and then selling them off maybe 6 months or a year later or something like that. And then once I got my driver's license, started doing that with cars as well. So that was sort of my first sort of basic entry level into business, let's say. But even from a young age, I was interested in it. You know, I was just one of those sort of weird things I was interested in. Even like games like Monopoly, or a game called Stock Market, actually was one of my favorites growing up as kids. We used to play that a lot. Me and my brother would be there for, hours, especially on rainy days or school holidays or something, playing these games. So, Jay, we're playing another round. So that was sort of how I started, I guess. And then started reading books, and as a lot of people do, sort of started with Rich Dad, Poor Dad, one of the sort of classics. And then, sort of gone from there over the years and investing in property and equity markets. And then, more recently, our business in Japan. But happy to unpack anything there that you want to sort of go into a bit more detail on, or whatever you want to sort of unpack there.
Can you just give just a little bit of some of the first things you did as an entrepreneur?
Like
younger,
investing wise?
Like lemonade stands or anything like that, or did you buy and sell stuff?
No, I never had the classic American lemonade stand sort of thing. We lived on a small country road. I think there would only be, maybe a dozen cars a day or something going down that road. So the lemonade stand probably wouldn't have done too well. I did actually set up a selling pears. We had a big pear tree, so I was selling pears at the roadside, but to be honest, that didn't do too well. But I gave it a crack for a couple of weeks, maybe made $10 or $20 out of it, sort of thing. And then started doing our little stalls down Frankton markets, which actually was quite lucrative. I was doing that about maybe 12 years age, or 11, 12, sort of around that bracket. Just selling mainly cactuses, actually. I was propagating little cactuses. My dad loves gardening and things, so I was knocking off a lot of his pots and cactuses and plants and whatnot, and potting them up and letting them grow for a month or two. And the thing with cactuses is you can just pull off bits and put them into pots, and then within a couple of months they start getting the root base, and away they go. And then I started really getting into the marketing of things. Actually, this is quite funny. I made like this big paper mache cactus. I probably spent maybe a weekend doing it. It was quite good in the finish. Would have been quite tall, maybe a bit over a meter or something like that. It was a bit of a prick to get in the back out of the car, but did that, made a big sign, the Mexican sort of desert scene and all this other stuff. But I don't know if it really worked or not, but it was interesting that I was sort of thinking about marketing at that young age. Looking back, I was like, that's pretty funny. But I was making anywhere from sort of $30 to $50 a week down at the market, which to a young bloke, I was pretty happy with that. And very little costs involved with that. That was mainly because I was buying a lot of Dad stuff and selling it. But I started we had these little cactuses. They were sort of, I can't remember the name of them, but I started gluing little eyes on them so they looked like little people sort of thing. And, that seemed to sell quite well. I don't know, just other little things like that. And then, I started investing in the equity markets at a young age, actually. When I was 18, I bought my first shares, went down to the real estate broker's office in Hamilton there, and bought a couple of, I think it was about 4 or 5 different shares at the time, which I would have been a lot better off to buy into an index fund and just let it sit there. But I didn't know much about that at the time. If that was an option, or that's what the broker recommended, I would have gone down that road. But he recommended a couple of different companies, and I went with that and sat on those for about 10 years, maybe.
Do you remember what the companies were?
I do, yep. I do remember a few of them. Sky City was one of them. That was, which they just opened up a new casino in Hamilton there. They had the main one in Auckland, and that was doing quite well. I think it was, I can't even tell you what it was trading for at the time. This would have been 2003, possibly. Maybe 2003, 2004. Wrightsons, which was another farming supplier, mainly because Dad brought stuff from Wrightsons for the farm, posts and drench and things for the farm. So that's sort of familiar with Wrightsons. But to be honest, I didn't really know what I was doing. I didn't know what I was looking at. They were just recommendations from the stockbroker. They had a number of different recommendations on the wall. And this is probably, the internet was coming around then, but you couldn't find much online. I wasn't really looking at anything online, just looking at brochures in the real estate broker's office, really. That sounds right. That seems to be trading at a 52-week low. I'll go with that sort of thing. They did all right. I bought some bonds with Infratel, and a little speculative gold miner in Australia. So that was my sort of first entry into the equity markets. Back then. And then I started dabbling in property when I was about 25 years of age. Bought a little place down Tuamoranui, which was really cheap at the time. It was an old state house. So that was the first sort of entry into the property market in New Zealand. And then subsequently from there.
Can you just tell the people at home just how you got the loan or whatever you did to buy the house?
Yeah, for sure. I've actually made a video where I'm just breaking down some of my mistakes that I made in this first purchase. There are definitely some mistakes made. It's funny that you asked that question. And I didn't get a loan, actually. I had saved up. I had about 50 grand to my name. A lot of that was from working in the army. I managed to save a fair bit of my money in the army. The bills are pretty limited. I was living on camp. I did one overseas deployment to the Solomon Islands. So I come back with maybe like 15 or maybe just shy of 20 grand saved up, which was awesome. So that's sort of just saved that. And then bought and sold a couple of equities and things as well. So that sort of bumped that up a little bit as well. So I bought this first place freehold, which I think I probably would have been a lot better off to get a mortgage on that. So it's not tying up, because at the time, that was pretty much most of my net worth. Would have been around that 50, maybe 60,000 if you sort of added up everything and included a vehicle in there or sort of thing. So I was pretty much tying everything up in that one property. I didn't put subject to anything. I didn't go subject to builders, subject to LIM, or didn't get any council checks. Didn't do anything. I sort of went to this property, was trading, not trading, was for sale for 49,000, and I managed to buy it for 43,000. So I was pretty happy with that. Spent another 5 grand or so doing a basic renovation, paint and curtains and a little bit of new lino in the kitchen and a few other bits and pieces. But it was just your basic 3-bedder brick home, old state home, pretty solid bones, nothing too sort of structurally wrong with it. Well, which was good because I didn't get a builder to look over it, that was such a rookie move. I should have done that. That was a big lesson learned there. Even like I had no idea what I was doing. I went down to the lawyers. I didn't have a lawyer. I was like, look, I've got this contract. I'm not too sure how this process works, but just walk me through it, sort of thing. And they were great. They walked me through it. Went through all that, and then basically went to the bank, withdraw 43,000. Went to another bank, like across. This is in Awakuni, in the central part of North Island. I had my 43 cans. I put it inside my beanie and then wandered across to ANZ. I think it was BNZ across the other side of the road. Here you go, I'm paying for this house. So that's how the first sort of transaction went, which was pretty hard case looking back at it. But the rental yield on that was extremely good. It was around 11%, maybe about 10 if you take out the rates and insurance and that sort of thing. So it was a pretty good rental yield on that property. but I did get a fair few damages over the period of time as well, which I didn't really sort of factor into it. I didn't do enough research on the area as well. It was quite a rough part of town, to be honest, which was something I hadn't factored into it as well. I knew Awakuni quite well, but I didn't really know Taumaranui, even though it was only sort of 45-minute drive from where I was living at the time. Yeah, there was definitely some things I learned from that deal. And then I ended up selling that house. Had it for maybe 7 years, I think, or 6 years. I can't remember exactly. And then put that into a development where I subdivided a section in Awakuni. But that was the first sort of deal. So yeah, a few lessons there. Hopefully, people can not make those same mistakes.
So you just sold the house and you go into the development. How did that one work for you?
I'd already bought this other property. I actually bought a couple other properties since then, and I had mortgages attached to these as well. But I bought a quarter-acre block in Awakuni, the old classic Kiwi quarter-acre sort of thing. There was a house on the front half, and there was a nice big blank section on the back, which the first time I went there, it stood out like dog's balls to me. Like, man, why don't you subdivide this back bit off? And I was talking to the agent. I was like, have they looked at this, or have they considered this? Like, it seems so obvious to me. But obviously the vendors hadn't thought of that, or were not aware of it. I'm not too sure. And then I even checked with the council. I was like, I'd look online at this property. Is there anything that you can think why I wouldn't be able to get, subdivision? And they said, oh, look, just from basic get-go, we think you'd probably get it. But obviously councils can be quite difficult. But in saying that, the Awakuni Council was fairly easy to deal with. I have dealt with other councils since then, and they have not been as easy, especially here in Australia. So that was fairly straightforward. I just had a shared access down the right-hand side, didn't have to touch the front house, ended up getting a house from Central House Movers, who were based out of Taihape, and just got that dragged and dropped on the back half of the property, which was quite an affordable way to do it as well. You kind of got an instant house. You don't have to wait 12 months build time or anything like that. And the house that we put on there was 2 little 1-bedroom units. They were quite small. It was sort of like a Lockwood style place. And yeah, we managed to get that delivered for, I think it was 79,000 Kiwi, which is incredible. Like, if I was getting that built, it would have been somewhere in the range of 250 to probably 300 at the time. And it was about a 90s build, and it was in pretty good shape. Once again, we did a basic renovation. I built a big deck off the front of it, painted, put some heat pumps in there. Me and my wife spent about a month on it. My wife was flat out painting. I was building decks, just sort of learning as I go. And now subsequently, we've actually sold both those properties. But yeah, that was a good little side venture and a good way to make some money, just out of, seeing the opportunity there and sort of seizing it, really.
You've mentioned, we'll just keep going on the real estate side at the moment.
Yeah, for sure, man.
You were just mentioning the councils, how the difference is. Can you just talk a little bit about that?
Yeah, for sure. So the local council there in Awakuni, actually part of the deal I had with the Central House Movers, which they were so easy to deal with, just so easy. Like, I think I paid them an extra $1,000, and they took care of everything with the council. So they organised the building approval, the DA application, everything they did. It took within the space maybe probably 3 to 6 months from memory. This is going back a few years now, so I'm sort of racking the brain. But I think which is like, I've been dealing with councils here in Tasmania, in Australia, and you're spending thousands of dollars, and it's just tests after tests, and it took us about 1.5 years to get another DA over the line, which we haven't actually done yet. It's sort of sitting there at the moment in the wings, because the funding we're going for actually got pulled on that one. But that was around the ballpark of around 30 grand before you actually put a peg in the ground. That was just getting flora and fauna assessments, building approvals, and traffic assessments, and all the soil tests, and all these different tests. And each test was costing anywhere from $2,000 to $5,000 maybe. And then just your time as well. Like, so much time and effort goes into this, and then obviously all the costs that are involved with the surveyors as well, subdividing sections and data titling everything, and it just takes so long, and it's quite tedious. I'm one of those guys that likes to see things moving forward, and personally likes to get stuck into things. Like, just if that's what I'm doing, I just want to keep working away at it, and it just kills me that things take so long. And it's just like dead money. Like you're putting money into something, you're not really seeing a significant return on that. It's just sort of, it really kills me.
And sometimes you're waiting like 3 months for someone just to stamp it or sign it off.
Oh,
You know,
it's so painful. And even like the Owakuni deal, looping back to that, I did all the work myself, all the building work that needed to be done and the renovation work, well, both me and my wife. And then we just got the building inspector come around, we organised it, comes around, yeah, mate, good job on the deck. Had a quick look under the house, check the insulation. That was one of the requirements. We had to put underfloor insulation in, and super easy. He was there maybe 5-10 minutes. I think it cost, maybe $200 or $220 or something. I was like, this is incredible. Like, this is so good. In Australia, it'd probably be $5,000, and you'd wait 36 months, and they'd come and I don't know, they'd just be a lot more drawn out. Seems a lot easier in New Zealand in that regard. Maybe just our community council. I don't know. Each council is different. But yeah, that was pretty different, sort of just between those two different councils. And we haven't tried to do anything in Japan yet. I know that would be a massive headache as well. But we've got a spare section in Japan. We may look at building in years in the future, but we'll see how that goes.
So, how many properties have you got currently?
6. 2 in New Zealand, 2 in Tasmania, and 2 in Japan.
And are they all mostly rentals? Or?
So in New Zealand, we've got one long-term rental up the far north, which is just ticking along nicely. It's sort of yielding around, at the current, when we brought it, it was yielding around 7%, I think, 6-7%. It's gone up slightly since then. And the value of the property's gone up a lot since then as well. And then Queenstown, we've got a little 2-bedder unit just out of Frankton, which is managed nightly, which has been affected quite dramatically with COVID. Our nightly rate's been pulled back to maybe a third of what it was selling at before COVID, mainly because we can only market to Kiwis now, and Kiwis are pretty cautious, pretty tight with their money, which is a good thing. We don't have those wealthy Aussies sort of coming in with all their mining money to splash on a week's accommodation. So that's dropped back quite significantly as well. But that's prior to COVID, that was ticking over quite nicely, and now that's freehold as well. We've managed to pay down that property, so that's nice. And then the 2 rentals we've got in Tasmania are just in Launceston, which is one of the biggest cities in Tasmania. Well, the small city in relation to Sydney, let's say. But you got Launceston and Hobart, and they're just stock standard 3-bedders, brick, but good little renters. They're renting for around $350 a week. We bought them for around the $200,000 mark. That's a pretty good sort of, it's getting positive cash flow from day dot. It's not like you're getting positive cash flow 5 years out or something. And that was always a big rule, or something that I always looked for when I was investing in property, that it was positive cash flow from the day I signed that contract. Whereas in Australia, I've noticed, especially I've had a lot of friends that have been caught out by this. There's this big trend in Australia where negative gearing was all the rage. Like, have a property that costs you, you've got to top it up another 20 or 30 grand a year because the rent's not covering the mortgage. It's just such a backwards way to think. I don't understand how it got so much traction, but it has. A lot of people use it to offset their taxes from their high-paying corporate jobs or mining jobs or whatever jobs they may have, which is all well and good as long as you've got that high-paying job. If you lose that high-paying job, then all of a sudden you're still topping up this mortgage, or I don't know, it just doesn't make sense to me. It seems so backwards. And I have had a lot of friends that have been really, really caught out with it and had to sell properties a huge loss. And especially they're buying into the mining towns in Australia, into Karratha when Karratha was booming, in the mining boom here in WA. Properties are going for around $1 million, just a standard 3-4-bedder, nothing nice, just your standard. And then it dropped back to around 300-400 grand sort of thing. So it was pretty tough to see, and then they're like, man, well, they were renting for like 2.5 grand a week, which is phenomenal rent for a standard house. Same thing, mining had a bit of a downturn, housing prices crashed, rents crashed. Whereas only a year or two prior to that, they had all these properties, come to this property thing and we'll sell you one of these houses, they're renting this and that. And it all sounds good on the glossy paper, but yeah, it soon went south for them. But they've recovered from that since now. But yeah.
So for people out there that maybe haven't got a property Have you got any advice for them in terms of how to
Um,
get started? Or
Yeah, look, it's I'm not going to sugarcoat it. It's pretty tough at the moment, no matter where you are in the world. It's pretty hard getting that first sort of leg on the ladder. I'm just lucky. It was sort of good timing. I was in the market, buying when things were a lot cheaper, especially in New Zealand. You can still buy houses for 200-300 grand. Whereas now it seems like the average price is anywhere north of $500,000, which is quite unachievable for someone that's just starting out. Let's say you've just graduated uni or just finished school or whatever you're doing, and you think, God, got to save up a deposit, and then cost of living in New Zealand is quite expensive as well, like rent and food and all the rest of it. And then if you're going out in the beers or whatever it may be, like it can all add up pretty fast. I always sort of say go for the 20% deposit, but also that goes back to that's quite hard to get at the moment because prices seem to be going up and up and up. Hard to say if that will carry on forever or not, but I don't know. Here in Australia, they protect their housing market pretty closely. They will defend it as a whole. They don't really want that major correction, which sort of New Zealand sort of falls into that category a little bit as well, I feel. But yeah, getting that 20% so you don't have to pay that lender's mortgage insurance, which is just such a bit of a cop out from the bank. Which is, I don't know. Some people think, I'll just get 5% or 10%. But especially in New Zealand at the moment, lending is getting extremely tough as well. I've heard just recently, listened to Frances Cook, Cooking the Books. She has quite a good podcast from the Herald, especially if you're just starting out on your investing journey or you just want to sort of learn a bit more about investing. I recommend her podcast, where she was saying like people are being knocked back because they got Uber Eats too many times or Netflix subscription or something like that, which is pretty crazy. And they're good high-paying jobs, and this wasn't going to sort of tip them over or anything, but it seems to be quite challenging at the moment. This is in New Zealand. Australia, not as much, but finance seems to be quite hard to obtain in New Zealand, especially if you're not in full-time work as well. If you're in full-time work and you're thinking about getting a property, I'll definitely try and get a loan over when you've got that full-time contract and you've got a track record of a year or 2 years of pay slips and a good contract, and definitely look at getting a loan or pre-approval over the line now. Especially if you're looking at changing careers or changing jobs, can be quite challenging. I know that's been my challenge in the past, is getting loans, because I've had a number of jobs, and to be honest, a lot of my jobs have been casual contracts as well. Finance has definitely been a challenge for me, a big challenge for me actually. Over the years, it's been quite tough getting finance sometimes. But yeah, it's so hard. I don't have any super advice on what you do. Just keep saving. I know it seems like a bit of a grind. There is some pretty good deals in New Zealand with the KiwiSaver though. You can access your KiwiSaver, which I think a lot of people should utilize that if you can. And you can put that into your first property, which is a good deal. Here in Australia, they have a similar deal, but with your super, which is nowhere near as good as the KiwiSaver deal. I feel that's a lot better because with the super deal in Australia, you can only put the money that you put in physically to save for your house deposit. You can't actually use any of your super money. So you can put it in there and you've got tax advantages with having it within your super, but you can only put in and take out what you put in for that. You can't just remove any of your super to put down for a deposit. Whereas I think with KiwiSaver, you can take out maybe everything but $1,000 or a couple of $1,000. Majority of your KiwiSaver you can put towards a deposit, which is a great deal. And definitely KiwiSaver. If you're not doing KiwiSaver, get on it. And look at what fund you're looking at as well. Like, don't just chuck it in whatever one. Like, try and get on. There's some great, like Juno funds is amazing. It's quite a good fund at the moment. I've been following Juno closely the last year or two, and also Simplicity. I'm currently with Simplicity for my KiwiSaver. Just make sure you make that minimum 1,042 by June every year to be eligible for the $521, which is another great little good return, 50%.
Before, say someone that's maybe studying and maybe still living at home, do you think if they were lucky enough to be a super saver to buy a first house for investment, maybe is a good way to maybe get started?
Yeah, for sure. That's what I did. I didn't buy. It's only recently that we've got our place where we live. Most of our properties were not places for ourselves because we lived quite a transit, traveling all over the world, working all over the world sort of lifestyle. It wasn't in our plan to have a house to live in. It was purely for more investment. And some people don't think that's good. They think it's better off to save for your own home. But for us personally, that worked out quite well. And it's only recently this last year where we actually got our own little place now. We've built a little tiny home in Tasmania, which was a fun little project, which it's great for us at the moment. But yeah, we will probably look at building in the next sort of 2 to 3 years, building an actual house. But that's cool. We've got our own little base now, which we both sort of needed, both me and my wife, and now we have a little boy, which obviously need a little house for him. So yeah, definitely. I think if there's properties out there that maybe not your dream home, but it's a good investment, definitely. I think that's a good way to go. And then you're in the game, and then maybe 3, 4, 5 years you might be ready to buy a house for yourself. Well, at least you've had this property that's gone up in value ideally, and it's been giving you good positive cash flow from day dot ideally as well. Once again, quite challenging at the moment to find these sort of positive cash flow properties. And it's hard to say, is there going to be huge capital growth in the next sort of 5 to 10 years? I don't know. It's so hard to call. I can't call it. But yeah, it's very hard to know what's going to happen there. But you're in the game. If you've got an investment property, then you could even sell that or use some of the equity that you would have gained in that property to maybe buy your first home to live in.
Nice. You just talked about you just got a tiny house. What made you decide to go in that direction?
Look, I'm not someone that likes to, like materialistic at all. Really, like I'm pretty pretty basic needs for me. My wife maybe not as much, but for me, I'm pretty, as long as it's comfortable and good, I'm happy. So for us, we just got a 40-foot container and a 20-foot container, put them together, and away we went. It was about 4 or 5 months. Me pretty much doing majority of the work. Got Sparkies in to do the electrical, plumber to help out with the plumbing side of things, and yeah, went from there. And it's just, I don't know, it's debt free, so there's no mortgage attached to that as well, which has been good for us, especially over this last sort of couple of years. We've had the rug pulled out from us a little bit with the business in Japan, making very little revenue there at the moment. So it's quite good, nice having a place freehold, so that we don't have to pay any rent anywhere or anything like that. And it come up pretty cool. Like, it's a cozy little place. Like, we've done a pretty good job with it. I don't want to brag, but it come up pretty nice. Got a cool little wood fire in there, like a little fireplace, and nice little kitchen. And it's a cozy little place. It gets super nice and toasty and warm in the winter months, especially in Tassie. It's similar sort of climate to New Zealand, sort of summers around this, late 20s, early 30s, and winters it gets down to sort of 0 at night sort of thing, maybe a little bit over, but yeah, similar sort of climate to New Zealand. So and then we've managed to do that actually on my parents' block. They have a big block, about 6.5 acres, I think, from memory. And they've actually we've strata titled that. So we technically got half of that. Cheers the in-laws. And then built this little shipping container on there. And eventually we will want to build the house probably within the next sort of 3 to 5 years. I think will be that plan. Build probably like a 3 or 4 bedder for ourselves, and then have this little place where we're living now as a rental, just an Airbnb sort of nightly rental, and you could easily rent it for probably at that a couple of years from now, maybe $250 to $300 a night, give or take. There's quite high demand for like nice little rentals, holiday rentals in the little area we are. It's quite nice up on the northeast coast of Tassie, nice beaches and good mountain biking. The mountain biking is really good. We've got quite a few trails that have just come in the last few years, which is awesome.
And thanks for sharing your real estate stories. We're gonna go back into the investing part.
Yep.
So you did your early investing in stocks, and then you realized after 10 years or so that you didn't make that much money.
I had no idea what
can you just what made a change for you to start looking at investing in stocks more seriously?
Great question, man. And for me, a big shift has been only in the last couple of years, really, with COVID. Actually, that sort of really brought a lot more focus back onto the equity markets. But prior to that, I was listening to Scott Pape. I'm a big fan of his work. He ran a Blueprint newsletter, as well as he's written a couple of really good books. If you haven't read any of Scott Pape's books and you're starting out, I highly recommend his books. Who's an Australian author that sort of covers basic sort of financial advice, and read a couple of good books. Anyway, he had another subscription model, which was $400 a year or $395, and every month he would put out a newsletter with a couple of different stock recommendations. They're all predominantly ASX listed stocks. Did have a couple of US ones. He had Berkshire and I think maybe Apple in there, possibly. I can't remember. Well, there's definitely Berkshire. I can't remember if Apple was in one of his recommendations. So I was doing that for a number of years, which was great. He was outperforming the index by around 3 or 4%, the Australian index, which is always a good benchmark to sort of, peer yourself against. Whatever country you're in, you can always try and, if you are buying your own stocks, always sort of bench it against something else just to see how you're performing. So I was doing that, and I was each month I was sort of looking over the companies, and if I had a bit of money at the time, I'd invest money within those companies he was recommending, and that worked out quite well. We ended up selling that whole portfolio to fund the purchase of the lodge in Japan, and this was in 2018. And then I was more or less, I've been dollar cost averaging into a couple of different ETFs in New Zealand and also KiwiSaver, but other than that, we were out of the equity markets as pretty much, didn't have much money outside of that at that time. And then in 2020, when we saw the crash, I was getting a lot more excited and started quickly trying to get a watch list together and started buying properties as the market was, equities as the equity market was tanking around sort of end of March, sort of early April there, which was good. I got into some good sort of, mainly ASX companies at the time. I wasn't too experienced with investing overseas. But since then, now I'm a lot more comfortable with it all, and started to branch out a lot further and become a lot more comfortable with investing in China and Japan and US and a number of different companies sort of in that sort of, but all sort of value-based companies. I'm not really sort of branching out into these sort of real speculative, high growth sort of stocks or anything like that. Real sort of value-based companies. But obviously that's where I've had a bit of growth ahead as well, is always good. Ones that I can sort of ideally sit on for a number of years and just let them run their time, not sort of buying and selling every day, or definitely have that long-term sort of focus to the equity market investing now, which I've just been doing since 2020, pretty much. Haven't really sold very few. I sold out of Sydney Airport recently because there was a merger and takeover by a group of super funds in Australia. They're buying out all the shareholders, so I sold out just before that happened because it's pretty much trading at what they were buying it for. So got rid of that. But other than that, I haven't really sold out of any positions, just letting them run. And I'm happy with where the portfolio is sitting at the moment. It's pulled back a little bit the last few days, or the last sort of month. I think I'm back down maybe 3% or 5% or something, but I'm very happy with how the portfolio is sitting at the moment.
So you would say you're a value investor? Is that what you?
Yeah.
If you were going to.
If you wanted to put me in a in a pile, I would definitely be more value over growth. But I'm not opposed to anything. If it seems to be a good value, and I can comfortably sort of understand the business, or have a basic understanding of the business, and have a good gauge on what I can forecast those cash flows to grow out to, nothing's off the cards for me. I'm sort of open to most sort of businesses, but I have to have that sort of basic understanding. Like, I don't invest in biotech or things that are totally out of my circle of competence. I am slowly sort of widening that circle of competence as I become more experienced and looking at different companies, and sort of crosses over to other companies as well. But the big one for me that I took a real while to get my head around was Alibaba. Actually, that took months, and even now I still only probably have a basic level understanding of Alibaba, to be honest. That was a beast of a company I've never even looked at before. I never really even looked at China. But now I'm comfortable enough to invest into Alibaba, which I do have a small stake within Alibaba as well. And then from there, that sort of moved on to Tencent and Process and Naspers and all this other sort of stuff as well within China, which has been heavily, sold off these last sort of, especially last year, but as you're probably quite aware of. And then, sort of, there's one particular company in Japan as well that I've been investing in recently as well, because the price has pulled back a little bit more on only in the last sort of month or so as well. But so now I'm sort of open across any country within reason. I'm not sort of just locking into Australia or New Zealand. Obviously, that's where I felt comfortable when I first started out. These sort of companies and things that you see, you can sort of relate to them, or you can go into the shops or whatever it may be. It seemed too big and scary to start investing outside of that, other than through ETFs, which sort of take a broad range look at it all, which is an easy way to go. Especially you don't have to pick stocks. Like, it's so easy just to invest into a great ETF these days and just get the index sort of average, and you'll still do incredibly well over the long term, as long as you dollar cost average in. You look at the last stats for the last 50 years. the markets are averaging around that sort of 8 to 10%. American, New Zealand, Australian, they're sort of all within that range. Whether you include inflation into that, that'll pull that back a little bit as well. But that's including dividends as well, reinvesting those dividends if you're buying dividend-paying companies. But
yeah. So the market at the moment's going through a bit of a correction or a crash, depending on what you believe. Can you give us any advice for people looking to maybe invest?
Yeah, look, like I don't try and time the market at all or anything like that. And anyone that says they can, it's very hard to do.
They're telling you lies, pretty much.
Like if anyone says that they know that the market's going to crash next week, or like look at anyone that's been forecasting these, or even like Michael Burry, and he's done quite well. He sort of timed the housing correction, the GFC back in sort of 07, but he was already in like 2004, 2005. He was in a few years before that, but he's calling market crashes every year, sort of thing. And same as even Robert Kiyosaki, he's been calling, the market's going to tank, next depression. Ray Dalio, all these sort of big players out there, they're always calling the next big crash and all that sort of thing. So you don't really want to sort of get caught up in that hype and panic and sell out the entire portfolio. There's one particular YouTuber which I don't really follow too much at the moment, or at all really, but called Meet Kevin, and he just liquidated his whole portfolio, I noticed the other day. But he did have a lot of leverage. I think he was leveraged up maybe 8 mil or something. But he sold out of everything, which I'm like, wow, okay, that's interesting. But like, who knows what the market's going to do? Like everyone's talking about inflation and all these things that we have no idea or control over. The best thing you can do is just, and like Warren Buffett and any of these sort of big value investors always say, look, just dollar cost average in over time. And then if you want to start looking out and doing a lot more research and really want to pick stocks on your own as well, then just really research that company and really try and get a deep understanding of that company you're looking at investing in, rather than just running off some tip that you got from some mate or whatever it may be. And look for businesses that you have a good understanding in, areas within your circle of competence. Maybe you work in that field. For me, like obviously I work in the oil and gas industry, and I'm not super pumped on the oil and gas industry. I don't really like it at all, but I do have a basic understanding of that industry. So then I do have a basic understanding of looking at oil and gas sort of companies. But I don't want to be weighted, 50% on oil and gas either. But or if you work for Google, obviously, then look into Google or whatever field that you work in. You will obviously have more of a an understanding of that than probably the average person. So that's a good area to sort of start, I think, if you're wanting to pick stocks. But you don't have to pick stocks, like we talked about earlier, just dollar cost averaging into an ETF. Especially in New Zealand, you've got like smart shares. I actually personally invest through smart shares myself. And then I have 3 ETFs within smart shares, which I've been doing for about 4 years now, maybe. And I've just been putting $500 in every month. That just sort of happens regardless of what the market's doing. It's crashing, it's going to record highs or whatever it's doing. And that's just done quite well. Like, especially these last couple of years, I've got, especially off the S&P 500 ETF, I think that's got like 25% or something, which is incredible. Or even through KiwiSaver as well. Like you've got, high growth options through KiwiSaver. Look into your KiwiSaver, look where that's invested. Even through Simplicity, which is, like I said earlier, the KiwiSaver provider I use in New Zealand. I also have another fund outside of the KiwiSaver through Simplicity as well, which is just a high growth fund, which has also been doing incredibly well, like 20%, which is, you're not going to get 20% every year, but that's a good return. I'm happy with that. I'm ecstatic with that. Everyone sort of wants to get 20% a day these days. Like they want to be, like they see some Dogecoin or something go up 300% in a week and they think this is investing. Like that's not, that's not something you want to bank on, that sort of, those sort of high returns. As I think a lot of people may be feeling this at the moment with a lot of these sort of high growth companies, especially ones that were in like Kathy Wood's fund, the ARC innovation funds and all these funds, like that is getting smacked around pretty heavy at the moment. She was in a lot of these high growth sort of companies where you're really banking on that growth coming through. Or even Tesla, for example, like everything has to line up pretty much bang on the money. They're forecasting a lot of huge growth there to pay these high rates. It's pulled back a fair bit recently, but you're really sort of putting a lot of faith in those companies to really hit those targets to pay these highly overvalued sort of prices. But that's just my take on it. Look, I'm always searching for a bargain myself. I think it's in the Kiwi way. You always want to get a bargain. You know, that's not sort of my style myself. But then, you know, even in saying that, like Alibaba at the moment, like there's a good chance of good growth with Alibaba over the next sort of 5 years. If you look out 5 years, maybe 10 years, a lot hinging on this sort of cloud there could be a fair bit of growth there. But even take out the cloud, it's still trading at a fairly attractive price at the current price, I feel. But then you've got to be comfortable with investing in China. A lot of people aren't comfortable with that. And, you know, the delisting issues and all the rest of it that comes around with that as well. But if you dig a little bit deeper, you know, you start sort of realizing maybe the chances of that are pretty slim. But yeah, it's that's sorry, I started going on a bit of a tangent
there. With investing, have you got some books you can recommend the viewers out there?
Yeah, for sure. Like I said earlier, Scott Pape's books, especially if you're just starting out, like The Only Money Guide You Ever Need by Scott Pape, such an easy book. You don't have to know anything about investing. You could literally read it in Sunday afternoon. It's there are pictures in there. Like I really highly recommended it. And even he's done another one for families as well, like raising kids. Read that a couple of times, just even though our boy's only 8 months now. I'm sort of getting the jump start on that. But, you know, just what to do with your kids growing up so they have a basic understanding of money. And by the time they leave home, hopefully they're, you know, in a pretty good position to do well in the world, you know, financially. Because a lot of people, you know, they go through school. School doesn't teach you basically anything. And if you come from a family that doesn't discuss finances or maybe doesn't run a business or whatever, which a lot of people are in that boat, you don't have friends, the family to talk to about investing. You come out, the bank's offering you a $5,000 credit card. You think that sounds great. All of a sudden, you've racked up $5,000 of debt on there on rubbish, just on going out with the boys and clothes or whatever it may be. But then that debt may be hanging over your head for 5-10 years. The banks love that, and they'll keep, I'll give you a bit more money or refinance it and package it up again. But just simple things can set you up so well, especially in those early years. I was quite lucky for myself. Like I read a few books early on. So it was always sort of there in the back of my mind, like just saving a bit of my paycheck, you know, save, even if it's 20% or 30% or whatever it may be, that you, even if you don't know what to do with it, just get used to saving that money. And then once you build up a little nest, yeah, like then you're like, cool, I've got $5,000 here or 10 grand, whatever it may be, whatever the figure, doesn't matter. It'll change your mindset. And it's nice knowing that you've got a little bit of money there, especially if something's happening at work, you're no longer happy at work, or I don't know, whatever happens, you lose your job, you hurt yourself, whatever. It's nice knowing that you've got that sort of rainy day fund. And this is one of Scott Pape's sort of things that he talks about a fair bit in his books. And a lot of finance books talk about this as well. I'll Teach You to Be Rich by, what's his name? Can't remember his name, but it's quite a famous American book, which is more sort of American based. But it's one thing he talks about quite extensively in his book, having this sort of rainy day sort of safety backdrop sort of fund. So yeah, Scott Pape's books. If you like those, you still want to keep going down that road a bit more. Richer, Wiser, Happier by William Green is a good sort of overview of a little bit more advanced, but just sort of a basic overview on a lot of some of the world's best investors, more value-based investors, Charlie Munger and Munch O'Brien, Guy Spear and Lee Liu and all these other sort of quite high-profile, value investors. And then The Darndo Investor by Munch O'Brien, fantastic book. The Education of a Value Investor by Guy Spear. These are all, and you can get all these on Audible, or even just podcasts as well. There's some good podcasts like yourself, or whatever. You know, there's plenty of good investing podcasts out there as well. I listen to a number of them quite religiously. Caught up recently, and there's one called We Study Billionaires, where they get on some great people, like some really high-profile investors on there. Investing with Tom, the Young Investors podcast, The Mentor with Mark Bouris. You know, these are all just things you can listen to when you're commuting to work or washing the dishes or mowing the lawn or whatever, you know, those jobs that require very little brain power, but chuck that in and then all of a sudden, you know, I don't really like doing dishes, but I chuck that in, dishes isn't too bad anymore. I'm just listening to that and, you know, away you go. Same as mine. Actually, I quite enjoy mowing the lawns, but because it's a bit of quiet time, I chuck my podcast in, my wife's not yelling at me or telling me to do something. The boy's not crying. I'm just out there doing my thing, mowing lawns. But yeah, like just definitely start exposing it and then start watching some YouTube. There's some fantastic YouTubers out there as well, which I've only recently sort of tapped into these last few years myself. I didn't realize there was so much good wealth of knowledge on YouTube, to be honest. That's a good place to start to dip your toe in the market a bit, or just get an understanding of what you want to invest in. Maybe you want to invest in property, maybe you want to invest in equity markets, crypto, gold, whatever it may be. Everyone's sort of got their niche or things that they want to invest in, and follow what you're interested in as well. Obviously, if you're interested in it, then you'll learn and read more about it as well.
I just want to put a bit of a curveball question in here for you.
Yeah.
If you had to make a bold prediction in the next 5 years,
here we go.
What's going to be the biggest sector growth for us?
Oh. What, like sector as in industry or country?
Yeah, like industry.
Yeah, right. Tech. Obviously, tech's a huge area, which, to be honest, is not a huge area within my circle of competence. But you've got, Web3 and the metaverse and all this, which, to be honest, is not, like I said, it's not an area I have a deep understanding of at all. I do find it interesting, but look, it's not an area I work in or a field that I really deeply understand. But you can tell that that's the way everything's online these days. Like everything we do is so much easier these days online. Like even if you look back 10 years, you can do half of what we can do now on, maybe way more. Like I can literally live anywhere in the world that has internet access, can keep on top of everything. Property can be in different countries. I can direct debit everything. I can buy equities in any country. I can have. It's so easy. It's so accessible. It's so good. Whereas I didn't have that access 10, 15, 20 years ago. But to look back to your question, I would say tech. And if I was going to say pick a country, but don't use this as any recommendation like that.
Financial advice.
I think China's definitely got some more room for growth there, or especially a few companies, or just the sort of the emerging markets, which sort of gets cooped in, and China gets cooped in that a little bit as well. I don't think America's going to have huge growth these next sort of 5 years, but I could be wrong. They keep printing more money and away they go. You can't keep doing that forever. But yeah, like. And just because I said that doesn't mean you have to go there either. Like, do whatever. You do you. Like, especially in Australia or New Zealand, like that's a great place to start. If that's where you're living, start there. Start small. You got Sharesies. Actually, does Sharesies cover New Zealand stocks? I don't use Sharesies.
Yeah,
Sharesies, yeah, right. Yeah. There's some good little New Zealand companies out there as well. Like start with what you know. Don't think you got to rip out and. But even, you got like Hatch as well. Like I've recently opened up a Hatch account for my son, Finn. And he's doing all right. And, I bought him some shares for Christmas. I put $500 US in there. He doesn't know this yet, but I'll slowly teach him over the years to come. But I got a couple of, I bought a share and a half of Berkshire, and which is Warren Buffett's company, if you're unaware of that. And then I think it's 2 shares of Alibaba. But yeah, so that's what I'm sort of ticking away with. So I hopefully start teaching my son. So over his life before he leaves home, he hopefully has a little portfolio there. And I'm trying to open a KiwiSaver at the moment as well. So he he'll grow up around that as well. So he'll have hopefully a basic understanding of that by the time he leaves home. And don't be afraid to talk about. A lot of people, especially in New Zealand, maybe a little bit afraid to talk about investing or finance, or it's like a bit of a taboo, like a taboo topic, like, don't talk about that sort of thing. I think it's good to break down those barriers and talk about it. Like, we use money every day. And if you are going through a tough patch, don't sort of like sugarcoat that or pretend like everything's okay and just bury yourself in more debt. Like, own that debt or whatever it may be and get on top of it. I mean, it's one of the number one things that breaks up relationships is problems with money. So I know for us, like, we talk about money nearly every day. Like, not like in an obsessed way or anything, but it's very open. Both me and my wife, we discuss it quite openly. It's not something that we obviously you have a little set money that you spend on whatever, and I spend on whatever. Or I don't really spend much money at all, to be honest. But my wife, hair and nails, all that sort of stuff. Cool, that's day-to-day stuff. But the bigger goals, buying a house, investments, business, whatever it may be very open about all of that, especially with your spouse, but even with your friends and family. Start talking about it more. I think it's getting that conversation started. Trying to break down that sort of, don't talk about fun money, it's taboo, or how much you earn, or whatever it may be. It's break down those barriers. Don't be yeah, don't be ashamed of if you're not earning that much or whatever it may be. Like just yeah. With me personally, I've always been pretty open about it all, everything. And then even people, I don't know, people talking to me about that sort of stuff, and I love talking about investing, so it works out quite well.
Now we'll move on to your business endeavors in Japan.
Yeah, we're covering it all today.
Yeah, man, we're covering it all today, man.
That's it.
Yeah, can you just go through maybe like a little bit of a step-by-step process on how you thought about going into Japan if you were visiting over there, and what made you decide to go investing?
Yeah, for sure. Look, yeah, business. By no means am I an expert in starting up businesses or anything. I'll sort of briefly tell you what we did, and then take what you will from that. But when it comes to business, I think it's always good to start a business in something that you're quite passionate about, or something you have a good understanding, or maybe you see a window there or a gap in the market where you think that this can work quite well. Ideally, it doesn't require huge amounts of capital to start that business as well. Is always a good thing. And even if you can do this while you still have your day job, let's say you're working Monday to Friday, 9 to 5, do this outside of that, when you get home, 5 o'clock, whatever, spend time with the missus, have tea, whatever. And then after tea, do 2-3 hours of that rather than just binging out Netflix or something. I think that's a good way to sort of start in business. And then you'll quickly learn that it's quite consuming as well. Anything, especially for us, starting a business in Japan, it was definitely, we were learning as we were going. Since then, I've done a business study through UTAS here in Tasmania when the pandemic hit. UTAS offered some free studies. We jumped on that, so that was good to get more of a sort of a academic sort of stance looking at business, rather than just sort of following your gut instinct, which definitely goes a long way though. Like, and that's all we were using for the first sort of couple of years for a business in Japan. We bought a small ski lodge. This was in 2018. It was at an extremely attractive price. We figured out pretty much on the back of an envelope, like I didn't have to run huge Excel spreadsheets or forecast anything crazy like that, that it would do fairly well, and I wouldn't have to get many bookings for it to start sort of stacking up. So the numbers looked quite well from the day dot, and the price was good, so that made it quite easy. And we actually purchased that lodge through our self-managed super fund in Australia that we have set up. Both me and my wife joint forces with our self-managed super, and we purchased the lodge through that, and then we essentially lease it back from the self-managed super. It's a bit of a keep an arm's reach with it, and we pay a monthly rent throughout the winter season. So you rent it off yourself, but it's a way to keep the Australian tax office happy. So that's how we purchased the first lodge. We're running it just like a normal little ski lodge like you'd have in most ski towns. More of a sort of a high-end backpackers. It's not super flashy or anything like that. We have 10 guest rooms, one room being a dorm room, so that sleeps 8. And then the rest, we have 4 loft rooms, so they sleep usually mum, dad, 2 kids in the loft, or 4 mates who will share a room or whatever. And then we have a number of twin rooms as well, and then a couple of en-suite rooms, and then a few staff rooms in amongst all that as well, which was great. Our 1920 season, we were fully booked up, and we were booked up by sort of the middle of the year. June, July, we were pretty much booked up for Jan, Feb, and sort of mid-March, and then the pandemic hit. But that's pretty much our season. We were lucky. That was pretty much the crux of our season, is that sort of January, February, or end of December, January, February, March is our winter season. And then we're currently not operating outside of that season. We are looking at possibly trying to maybe get some school groups through in this autumn months. But we'll sort of figure that out as time progresses. And then we have purchased another lodge in 2020 that came up as well, which we haven't run yet, but we've got those there. So ideally, with our business, we'll get capital growth, hopefully, which is something you never want to sort of bank on, but there's a good chance we'll get good capital growth from both lodges. And then we're getting good cash flow from the business as well, from running the day-to-day operations of the business. And it's hard to speculate on this, but, I'd imagine once we get through COVID, whenever that may be, people will be pretty keen to get back overseas, hopefully get back on the board over there, and can't wait to get back on for winter holiday. So we'll be there ready to get into that, hopefully. But over this time, we've sort of been fine-tuning the business as well. We've done a fair bit of work on the website, bought a whole fleet of snowboards. We've got about 20 snowboards now for a little rental fleet, and just sort of trying to think through things a bit easier. how we'll run it, especially now with our boy as well, because we are quite active in the day-to-day running of the business. Which, if you are starting a business, you are going to be doing a number of different jobs that you probably haven't ever done before. You're going to be wearing different hats. You're going to be trying to balance the accounting and the marketing and all these different things, unless you're coming in with huge bankroll and you can
cleaning toilets and all that stuff, all the...
Oh yeah, you're doing it all, and I love it all. Like, it's awesome, but it's definitely, you're wearing multiple hats and you're putting out fires flat out. And then staffing, depending on what business you may have, you've got staffing you're going to have to deal with, which is another sort of kettle of fish, managing staff.
How is the getting staff? Because it's quite a short season.
For us, it's not too bad. We put out a post on Facebook sort of thing, and we get 20 people that are very interested. But finding people, because you're essentially looking for a housemate as well for us, because they're living at the lodge with us. So it's a unique sort of job in that role, and we're not really paying much either. It's more of a sort of a a backpacker season role. You snowboard pretty much all season long. We give people a ski pass, and they only do 20 hours a week generally is what we sort of do, day on, day off with the other staff members. And the general day-to-day activities for our staff would be snow clearing or picking up guests or helping out with breakfast in the morning. Breakfast is quite busy. Generally, I'm the one that's cooking the eggs and that sort of thing, but just sort of running plates or whatever the staff, or washing the dishes actually afterwards. We try and get everyone through from 7 to 8, and then you're out. Go up the hill, do whatever. But that's our sort of time for breakfast, which is a busy little time in the morning. So that's sort of what we do there. But for me personally, I would much rather favour someone that's friendly and just good with the guests. For our business, we're obviously running a ski lodge. Over work ethic, like I'll let that slide. Maybe they don't clean the toilet that well or something like that. That all can be taught within a couple of days. You can make a bed, clean the toilet. It's pretty easy. But you can't really teach that. Having that good positive attitude every day. Answering all the silly questions that you'll get, which we get a lot. Well, not a lot, but and depending what your business is, I don't know, especially if it's in a tourism sort of a business, you're going to get some ridiculous questions, like just outrageous stuff. You're like, what? So you just got to put your brave face on, yep, and just, the old golden rule, customers are always sort of right, even when they're not. So, yeah, that's definitely a big thing that we look for now is making sure that they've got that right sort of person and a good fit for us as well. We don't really. We're not like constantly cracking the whip or anything like that, but when there's work to be done, we prefer to get it done, and then you can free to snowboard for the rest of the day or whatever you want to do, chill out. So that's sort of how we're running it, because you essentially, they are more like workmates or housemates and that sort of thing. So you've got to have that, but then you maybe have to pull them up a couple of times if they start doing something stupid or getting drunk or whatever it may be. But that's just some of the things that we sort of have to deal with. But we've been lucky; like our staff have been so good. And we could not do what we do without having good staff help us. And we hope that they enjoy that. It's a pretty good arrangement. I know if I was a young fella or a young lass, I would love the arrangement that we give, the season pass, free accom. Basically, they have a free season. You're not really earning a hell of a lot, but you can snowboard every day, which is, I know that's something I was always looking for when I was working winter seasons overseas. That's the dream gig for me. If I get maximum days to ski or snowboard, and then whatever little odd jobs I can do to make that happen, that was the goal. Always looking for that. So, and people just love Japan. It's a cool country. The people are amazing. The food's good. The snow's deep. Like it's a good country. It ticks a lot of boxes for me personally. Anyway, I really enjoy Japan.
So what for the people at home? What is Did you find any? Did you have any troubles with like people in Japan when you're trying to set up the business, or like with the businesses, or?
No, I mean, we're pretty lucky in our little town in Miyako. So the main sort of ski hotspots in Japan, you've got Niseko, which is in the northern part of Japan, in Honshu. You've got Hakuba, which is in the main sort of island of Honshu. And then Miyako, which is sort of like the up-and-coming ski town, or Nozawa Onsen as well. But these are a couple of smaller ones as well. But sort of Miyako is that third one on the list. People have already done Niseko usually, but then they start wanting to venture out because Niseko has been quite busy and overrun with tourists, especially a lot of Aussies. It's quite an easy, quick trip to get to Niseko. So in our little town, a lot of the smaller lodges like that we have are owned by Westerners, like Aussies and Kiwis and that sort of thing. And we all get on really well together generally. We're all pretty good, even though we are in competition with each other a little bit. There's plenty of business going around. Everyone's pretty much booked up majority of the season. And there's a few things that you've got to sort of learn, just different things, Japanese customs, and just different ways they do business. It can be quite backwards and quite old relative to New Zealand and Australia, with banking and insurance and a number of different things that can be quite challenging. So it's good, asking some of the other, so who do you use for insurance, or how do you do your banking, or how do you do your taxes, who does your taxes, or all these different things. So it's awesome that we have that sort of network of us, and we've even formed a little local chamber of commerce in our little town, someone that represents basically all the Gaijin, all the Westerners, who sits at the table with the rest of the Japanese sort of thing, which is cool that we have that spokesperson.
Nice.
And we're all trying to, especially in Miyoko, we really want to sort of, I know me personally, and I know a lot of the other lodge owners fit into this boat, we want to really sort of intertwine with the Japanese rather than just come in and overtake the Japanese sort of thing, really try and sort of intermingle a lot more better, have a good relationship with the Japanese, whereas you've lost that touch in Niseko. It's just overrun by Aussies, and even Hakuba to a certain extent as well. The Japanese are just sick of Australians. So we're really trying to nurture that relationship a little bit, even with our neighbours. All our neighbours are Japanese where we are, and I'm really conscious that I don't want to be that sort of drunk, annoying Westerner. So that's something that I'm quite mindful of myself. And even for the guests as well, like if the guests are carrying on and, guys, you're going to rein it in a bit, like be respectful, of the Japanese. They're quite reserved, polite, quite quiet people, the Japanese. Amazing. They're so nice and so polite and so helpful, especially our neighbours. But, to them, I know looking at Australians, they just think, my goodness, these guys are out of control. So yeah, definitely got to try and tread lightly in that regard.
Can you just talk a little bit, if it's okay, about the financials of your season, like that first season went?
First season was pretty soft opening for us. We only just managed to just get our RioCan license, like our hotel license, just before winter, basically. Well, winter had started. We got it 29th of December, I think it was, and then we could list on all the different OTAs, all the different platforms, Booking.com and Airbnb and Expedia and such. So that was still a pretty soft opening for us, but we still made a pretty good profit that first season as well, which was great. First year, and we were learning the ropes. We didn't really know. We had a few long-termers that lived with us all season long, which was pretty cool as well. And we were just charging them a weekly, quite cheap. We're only charging them, I think it was 10,000 yen, so it worked out to be about $150 Kiwi, give or take, a week. And we had 4 long-termers that lived with us all winter long, which was cool as well. They're great people. We're very lucky that we had them. They're very good people to be living. A lot of seasonaires, they were ski and snowboard instructors. One guy wasn't working at all. He was just snowboarding every day. And one of the other guys worked at one of the ski resorts. So that was the first season. Like I said, pretty soft opening. But with the second season, yeah, we were definitely recouped all the costs of the lodge, that the outlay that we paid for the lodge. So essentially everything moving forward is all profit now moving forward, which is good, which is a good position to be in. For the first lodge, obviously the second lodge, we haven't made any money out of that. That's been bleeding a little bit these last couple of years. We can't get anyone there. We can't get there ourselves. We are trying to get back there especially I was hoping to be back this winter, but due to visa arrangements not coming through in time, that sort of fell over. But depending on the price point that you buy the lodge for, this is just a very general rule of thumb, you can probably recoup your costs within the first 2, maybe 3 seasons. You can be moving forward and recoup majority of the costs, I would say. Depending, if you buy an expensive lodge, maybe not as much. But that's our own personal experience. Some people maybe not quite like that, but that's how we've sort of, and we're running a pretty tight budget as well. We don't have huge staffing, like a lot of the bigger lodges might have a dozen staff or something like that as well. And because we do a lot of the work ourselves as well, we're in there every day working for pretty much the whole winter long, which I'm happy to do. I love it. It's good.
Yeah, no, I was just going to ask you about that. Have you ever thought about, with the current climate, getting a manager in there to run it, like a local?
Yeah.
Oh, you can't get in?
For sure. We've got a friend at the moment that's living at one of the lodge lodges, our main lodge, the Mountain Hut, and she hosted a few guests over the Christmas, New Year's period. And these are guests that have stayed previous seasons with us, and just a few of their friends, actually mainly Taiwanese, but they all live in Tokyo, predominantly Tokyo, sorry. Which was good that she's there to sort of look after them while we're not there. But like I said, we're charging a fraction of what we'd usually charge, and they're getting a really good rate, and they're getting a whole lodge to themselves, which is pretty incredible. Usually you pay quite a premium to have that ability to have your own ski lodge, which is what we were doing. Actually, we managed to get some big group bookings throughout that 1920 season, where we had one Singaporean company that just booked us for 3 weeks straight, which was great. They looked after the guests. They were coming every week. They were turning over a whole new group of guests, where they were sort of hosting them and showing them different ski resorts and all the rest of it. And we were just providing the accommodation part of it, really, which made our life easy. We did give them a fairly good rate on that, but it was still working out to be, it was around $2,000 a night we were charging the lodge out for them, which was a pretty sharp price. And then they could sleep 34 guests, which they weren't quite up. They were sort of more around that late 20s, which was good. But if they did have that access to sleep up to 34 if they wanted to.
Nice. So what are some future plans for you with the business? Are you looking to buy any more?
Possibly. Yeah, well, getting back there is key. And just getting the second lodge up and running. We want to run that more of a mid to sort of high end sort of lodge. Same sort of, we're going to be pushing that to more group bookings. It's a bit smaller. It's only 7 guest rooms. So we're going to sort of cap that around maybe 20, early 20s, where people can just, we'll give them a tour of the lodge. This is the lodges, whatever, there's a ski area there, sort of thing. It's within walking distance, or ski down to the lift. So it's very close proximity to one of the better ski areas, or in my opinion, the best ski area on Myoko. So that should be quite attractive. And there's actually a little log cabin out the back, where we're going to set up camp in there. So me, my wife, and our little boy can live back there. So we're still close if they've got any questions or anything like that. But then in doing so, we will have to get some managers in, or maybe not so managers, but definitely someone to sort of more manage the other lodge. Sort of fill our role there, just to organise the coming and going of guests every day, and the day-to-day operations, which is not that hard. Once you sort of wrap your head around it, it's a fairly easy business to run. Or I don't find it very challenging. Well, there's definitely challenges to it, but you can have, like, I snowboard pretty much every day. That's the goal. To maybe work the morning or work the afternoon or whatever it may be, but try and spend as much time on the mountain as possible. So obviously, the bigger you grow, the less chance of that happening. Well, you can just keep staffing up as well, I guess. But like we mentioned earlier, it is hard trying to find staff just for such a short season. If you can, there is quite a few guys that just do back-to-back seasons. I have a number of friends that have been doing it for like 15, 20 years, where they'll do like a New Zealand or Australian winter, and then they'll go to the Northern Hemi, do Japan or Canada or US or Europe or whatever, and just do that. Which, me personally, I quite like summer as well. But that's what they do, and they enjoy that. They're quite happy with doing that. And then you've got a shoulder season in between those 2 winters as well. So you can sort of tap into that sort of crowd if we get to that level where we need, a dozen staff or whatever it may be, and then you get them coming back year after year, which would be good. So you're not having to train up each season, train up, new staff and everything. But it's pretty easy, like making beds, cleaning toilets, dropping guests off, being friendly. Like it's all pretty common sense sort of stuff. But still, I would prefer to have staff returning though, and like especially for the guests as well. We get a lot of returning guests. A lot of the guests come just because they want to see us as well. Like we've had guests stay for us 2-3 seasons with the other lodges we've managed in the past as well, which is cool. Now they're coming to our lodge. Like it's quite cool. You sort of by the end of the people stay, they become like good mates almost. You don't really see them outside of the ski area, but like you wouldn't catch up with them maybe. Actually, in saying that, we caught up with some friends only last week who we've done a couple of seasons with, or holidays with in Japan as well. So you do catch up with them outside of the ski industry a little bit as well.
Have you thought about investing in other countries, or was Japan like one of the cheaper options for you, or did you just really like Japan?
Yeah, I've done a lot of winter seasons in Japan prior to buying the lodge. Did like 4 winter seasons there prior to and a couple of summers as well, or one sort of summer as well. And the price point as well. Like if you were to compare it to like a similar sort of size lodge or something hotel like in Queenstown or Thredbo or something like that in Australia, like you'd be paying 5, 6, 10 times the price to what you'd pay in Japan. Where in the Niseko prices are similar to sort of Queenstown, on par with Queenstown sort of prices. They've really blown up there over the last sort of 10, 20 years. But Miyako hasn't hit that sort of peak yet, which, you know, if we may do. I think there is a fair bit of interest out there in the market. I was only chatting to a guy the other day who does a lot of commercial real estate in Japan, predominantly in the cities. And he I think he listened to me on the Investing with Tom podcast. And then he sent me a message and he's like, oh, I just want to sort of get a bit more of an understanding on Miyako, because he's getting a few clients asking about Miyako for some reason. And these are a lot of, I think he deals mainly with institutional investors as well, big hotels. You know, we're talking 100 room, 200 room sort of hotels, not mum and dad operations like what we run. But it was interesting to talk to him, and I was kind of interested to hear that, you know, there's a bit more interest out there. And even through the YouTube channel, I've had people reach out to me wanting to buy lodges or buy a property to like a holiday home. Because I don't know, there's not many places in the world that have access to so close proximity to the ski resorts. Like you can buy houses in Miyako, maybe not as much anymore, but anywhere around that sort of 50 to 100,000, just depending New Zealand, Aussie, sort of within that range. And we're only talking maybe a 2-3 kilometre drive to the ski resort, which is incredible. Like there's not many, and then the skiing is amazing. Like it is world class. Like the snow this season has been a bit of a one for the records, but we're over 11 meters already for this season, which is just a real headache to deal with when we're not there. But paying people to snow clear, and it's quite expensive to not be there. And I'm gutted I'm not there to be riding it. But
so, what are your costs roughly currently in the lodge? Without having many people there.
Yeah, so the costs for obviously 2 lodges doubles the cost, but the rates aren't too bad. The rates are only 120,000 a year, which works out to be around 1,500 Aussie a year. Insurance is similar to that as well. So your rates and insurance is around $3,000, so double that, it's around $6,000 for both lodges. We are paying a lot of money for snow clearing at the moment. Like I just got a quote today that come in, and that's going to be 200 to 250,000 yen, which works out to be $3,500 to get the roof snow cleared on one of the lodges. So that's quite an expensive bill. And then you've got vehicles as well. We've got a couple of vehicles over there. So you've got shuck-ins, or what they call as a shuck-in, which is essentially a warrant of fitness, which you've got to pay that, and then you've got to pay tax on top of that as well. It's quite expensive to have vehicles in Japan. Cheap to buy the vehicles. Vehicles are super cheap. Buying the vehicles not cheap. It's super cheap, but the ongoing cost of vehicles is quite expensive. So as a real rough ballpark at the moment, you'd say around 10 grand in outgoings. That's just for, you know, the rates, insurance, and that. But then the bills, obviously, if you're running a full season, the kerosene, which is a lot of the heating that we use, heating the water and heating the lodge as well, which we're trying to get away from that a little bit. And then the power bills are astronomical. Like the power bill for the lodge was around 100,000 yen a month, which works out to be 1,300 a month in power, just power. And then your kerosene on top of that, that's another probably another $1,000 too. So your running costs throughout this is for a busy lodge though, like we're talking 30 people staying, you know, most nights sort of thing, which is okay. You don't mind paying that because you've got good people coming. So at the moment, those costs are obviously a lot lower as well, because we don't have anyone staying there, so we're not paying huge power bills and that such. So yeah, your power bills and your that would be anywhere from 2 to 3 grand a month under full operation. So that's sort of where you're sitting with that. And then fuel and food for breakfast. We run a pretty streamlined breakfast, just basic sort of scrambled eggs, rice, like a little salad coleslaw thing, toast, muesli, yogurt sort of thing is what we sort of run for our brekkie. Rotate the egg, scrambled, omelette, fried, whatever it may be. And that's pretty cheap. I've got that down to about, it's around 150, 200 yen a pop. which is like like $2 a head, let's say. So that's pretty cheap. And then we have a small bar as well, which we self-serve. People can just tick and flick. We have a little sheet, write their room number down. They bought 3 beers and 3 strongs or whatever it may be, which has worked out well. I don't have to be there manning the taps, or we don't have to have staff manning taps or handing up beers, and which works out really well. People are like, oh, that won't work, but it works well for us. And we haven't had anyone really knocking off too much. Not that we noticed anyway. We don't take it religiously every morning or anything, but the only time that it would be if we're having a few beers, maybe, hey, what's going on there? Or we start handling, hey, some beers. But no, that's a nice little, and you can easily double your money, triple your money on some of the beers and the spirits. They have these things, what's called strongs or chew highs, which are like 9% drinks, 500 ml, or we've got the 355s as well, but the Australians love them, and they're cheap. You're buying like 99 yen a pop. We're selling them for 350 yen, so you're doing all right. But even if you're buying them at the supermarket, you'd be buying them at the supermarket for 250 yen, so we're not putting huge markup on it. But we go to the wholesalers and get them for around 100 yen a pop. And that's every day you're putting more cartons of that in the fridge, and it's just like almost like a vodka and lime or vodka and lemon sort of, but they're super easy to drink, almost too easy. So it gets a few people unstuck there, but yeah.
Yeah, if you had just anyone wanting to start a ski lodge, what's some advice you'd give them with the knowledge you've gained?
Yeah, I think definitely being on the ground is key. Like obviously spending a lot of time, you don't have to spend huge amounts of time in Japan, but being there, being on the ground, looking at different properties, it's very hard to do anything like that online. We don't have realestate.co.jp or anything like that, unfortunately. So you kind of need to be on the ground, talking to the real estate agents. They'll show you around a couple of properties and whatever it may be. And then maybe they might not even have anything available at that time. Then just being on their sort of list, or email them every 3 to 6 months or something. And then when something comes up, being ready to pull the trigger, having that funding there, ready to go. Not pissing around with trying to get loans. You're not going to be buying property. Well, you'd be hard pushed to get a loan over the line in Japan. Pretty much all the lodges that I know of that are owned by Westerners are all freehold. They've either sold their home in New Zealand or however they've funded it. It's all been pretty much a cash purchase. They're not getting loans, or they may have got a loan somehow in Australia or New Zealand, like withdrawing equity from the property or something along those lines. But generally, you need to have that funding there, unless you're well established in Japan. Like we're in the process now of once we get our visa, we've got in touch with the crowd to possibly look at getting finance. We still need to do a bit of work to this other lodge, and we need to buy a bulldozer and a few sort of high-end sort of things that we will need to purchase. Nothing crazy, maybe within the 50 to 100 grand sort of range. But we would like to get a loan, and the interest rates in Japan are so cheap. They're sort of around the 0.5%, and they don't seem to fluctuate at all. That's just sort of where they sit. So yeah, we've got in touch with a good crowd there, which we've paid them a small fee. And once we get their visa, we should be able to hopefully try and get a loan over the line with them, which I'll be happy to keep that ticking over for a number of years. At that sort of interest rate, it's fairly easy to keep that. Because as it stands, we have no debt in Japan at all. Everything's freehold, which has been really good these last couple of years. If we weren't in that position and we had huge amount of millions of dollars or whatever it may be, it'd be a total different story. It'd be bankrupt or something, so we're quite lucky in that regard.
Yeah, can you just give you a chance here now to talk about your business, your name and everything, and also your YouTube channel?
Yeah, for sure. Yeah. I'm fairly new to YouTube. I've only been doing that for about a year and a half. No, a bit longer. Yeah, started that in 2020. And that's the Adventurous investor. Definitely jump on there and check it out. A lot of value-based sort of content. I've got a few videos about the lodge if you want to learn a little bit more about the lodge as well. Basically covering off a lot of what we've discussed today. So that goes into a bit more detail on a few different topics there. A lot of sort of personal finance based stuff through the YouTube channel. And then our lodge is mountainhutnyoko.com is our website name. And on there, we've got both lodges on there. And they're also listed on all the different platforms, Airbnb and Booking.com and Expedia, and then Expedia branches out and puts you on a number of different booking platforms as well. So it's pretty, and then through Google as well, and TripAdvisor, we're across all of those. So that's where we try and sort of keep a pretty good profile across that, and encourage our guests to leave reviews as well. If they've had a good time, say, all right, jump in and leave us a review. And if you didn't have a good time, then don't do that. So yeah, that's just, and then I've recently sort of got onto Twitter, which I'm really enjoying Twitter, actually. There's some good, very smart people on Twitter to follow. So I've just started getting into Twitter only over the last few months as well. So yeah, that's, you should be able to track me down on one of those, or just reach out through any one of those platforms if you want to get in touch or anything like that. It's all good. I generally try and get back to people within a reasonable time frame.
Nice. Yeah, just to finish off, I just want to give you one more question to
wrap it up.
Around investing.
Yep.
If you had to pick one stock right now for the people out there, or two if you need to, but one stock out there that you think they had a good value right now and they should be looking to buying it. I know you've mentioned a couple already, but
yeah, I think I'm going to go back to those ones that I mentioned. Actually, what I bought my son at the moment, Berkshire Hathaway. Berkshire Hathaway is a good solid, it's almost like an ETF essentially, Berkshire Hathaway. And if you look at it just on a PE multiple, I think currently they're only around 10 or something, maybe 10 or 11, maybe slightly higher because it's come up a bit recently. But if we do get a lot of this inflation that is coming through, that everyone's sort of, and around this sort of 7, 8, 9, 10% inflation rate, a lot of the companies within the portfolio will do quite well through a high inflation period. They can just keep increasing prices, and the whole portfolio that Warren Buffett and Charlie Munger manage will do quite well moving forward. If we do hit a high inflationary period for a number of years, that will fare quite well. If you're wanting something a little bit, so that's a good little, just a good solid staple one to have there, one that you set and forget, don't even look at it, just buy it or dollar cost average into it and just let it run its course. And then start reading about Warren Buffett. He's a very interesting man. Actually, there's a really good book I'm reading at the moment. Hang on, I'll just get it. Buffett, the biography by Roger Lowenstein, which is really good. I'm about halfway through it, which just gives a real basic overview of Warren Buffett. But he's an interesting man. But anyway, side note. So yeah, now I might cop a bit of flack for this, but I'm going to go with the Chinese companies. Alibaba, it's definitely trading at a very attractive price at the moment. And there's a lot of big, smart money that's invested into Alibaba, way smarter than me, which also builds on my conviction within the company as well. Good to see these sort of big value investors investing a lot of money. Charlie Munger, Warren Buffett's offsider, recently doubled his position again. Only within the last sort of month or so, we've got news of that through the latest 13F. So definitely Alibaba. And if you wanted to go even a bit more adventurous again, you could start looking at Process as well, which owns a 28% stake within Tencent, which is another big tech giant within China. And they've held this stake within Tencent for about 20 odd years. I think they've bought that, about early 2000s from memory. Actually through a company called Naspers, and now they've spun out Process because Naspers makes up a big chunk of the South African Stock Exchange, which is almost taking over the South African Stock Exchange, so they had to spin this out onto the Dutch Stock Exchange. And it's currently trading well below net asset value with about a 40 to 50% discount to NAV. So definitely look into that one. I've made a couple of videos on it if you're interested to learn a little bit more about Process. But Tencent is a behemoth. Like, it is such a big company. And like I said, I have a very basic understanding of these sort of big Chinese tech players. But they've had a rough sort of year or so, and they're trading at some attractive prices at the moment. And I think, if we look out another 5-10 years from now, they won't be at these sort of rates. But that's not buy recommendations. Do your own research on that. There's a number of different YouTube channels that have covered both those. Not so much Process maybe, but definitely Alibaba. Every YouTuber and his dog is making videos on Alibaba. So there's a number of good, especially check out a lot of Investing with Toms. I've made a few on the channel touching on a little bit as well. New Money has done a couple of good videos on Alibaba as well, just to give you a basic understanding, and then you can go from there and look a bit deeper as well if you want to learn a bit more about Alibaba. But I've used Alibaba in the past with the lodge in Japan, and it's a great service. And there's a lot of different businesses within Alibaba as well. It falls under that umbrella. There's a number of different, and they've got a good stake within Ant Financial as well. which was meant to IPO in 2020, I think it was, but the CCP sort of put the brakes on that one. But that was sort of meant to IPO around 300 billion, and Alibaba has a third ownership stake within that business as well. So whatever you sort of put value on that as well. But at the moment, you're kind of getting all that for free at the current price that it's trading at, really. It's trading at a very low multiple, like on a price to earnings ratio even. Especially, there could be some good growth coming through with the cloud space there, which is, like I said, it's not something I have a huge understanding of. But they're getting pretty good growth, and I think they're about around a 30% stake within the market within cloud space within China. I think I'd have to double check on that one, but it's around that sort of figure, and they may start growing there. And it's a very good margins within the cloud space. Like if you look at AWS with Amazon and that sort of thing, pretty good margins. And they were keeping that off the radar a fair bit there. Jeff Bezos, early days, he was really not telling anyone about that as much. And then all of a sudden, then Microsoft starts jumping in on it. Google, everyone's trying to get on the cloud space. So there it is. There's the picks. We'll see how they go. See how they fare. And just jump in and follow us on YouTube. I do make the odd video from time to time. I've got one actually coming out in the next couple of days where I talk about more of a micro cap actually, which has come through from another investor, which I'm not currently invested with. But yeah, definitely stay tuned for that one.
Nice. Well, thank you so much for coming to the Barry Charles podcast today, Neil. And I hope
it's been awesome.
I hope everyone out there hopefully got some good advice from you out of that.
Yeah. Like I said, I'm no expert in any of these sort of fields, but I do have a basic understanding of some of what I discussed today. And definitely jump on the YouTube channel or whatever it may be, and if you want to get in touch or anything like that, or come over to Japan. But even if get you over there, Charles, get you over there, Barry.
Yeah.
Get you on the slopes, mate.
Nice. Yeah, I've only been just at the airport. Yeah, I've just been at the airport for about 6 hours before I was traveling. Further travel.
Oh, this is in Tokyo? Or...
Yeah.
Oh, nice.
Stuck at the airport, but yeah.
Yeah, sweet. Oh, it's an amazing country. Even if you don't want to ski or snowboard, there's so much to see and do. And it's a good, safe country. I rate it highly. Yeah. And I've traveled to a lot of different other countries, so it's definitely up there on the top of my list, that's for sure.
Nice.
And now even doing business there, I wouldn't be there if I didn't like it.
Well, thank you very much, everybody, for coming along and listening today, and we will see you at the next podcast.
Awesome.
Take care out there, everyone.
Cheers, guys. Catch you.